All right, good morning, everyone. Let's get started. Okay. Um, Last night's session in the States was a little bit of follow through to the downside for the first time in a while. Um, I, we did fight back a little bit off of the bottom at the end. I mean, we actually bounced as much as I think about 10 points in the S&P. Until that last little bounce, really the day session was not pretty. I mean, uh, it wasn't overly aggressively offered, but I think that it felt like it got saved just a little bit there at the end of the day. There's a lot going on at the moment that I think is very, very important to global financial markets, all asset classes included. The biggest thing, and we've been talking about it for several sessions in a row, has been U.S. 10-year Treasuries. We're trading at 224 this morning and continue to push higher. And it's doing so without even, a whole lot of amazing data. You can see the ADP payrolls actually grew by less than forecast. That being said, we have had some better than expected data points as well. It's just we haven't seen that barrage of good data that we were seeing, only 3 or 4 months ago. So, to me, that's really telling that Treasury yields are able to continue to climb with kind of subpar data to an extent. So I think the two biggest things in the market, yesterday, the two biggest things in the market were that one, obviously, the continuing of the U.S. Treasury yields to moving higher. We're almost 3% on the 30-year now, and then Janet Yellen was speaking at the IMF yesterday, and she made comments that stock valuations are quite high at the moment. Basically pointing to the fact that, yes, the Fed is, in fact, watching that. I think the S&P is trading on an 18.7 times multiple, which historically is quite ridiculously expensive. Anyway, crude oil inventories yesterday, we had a draw. For the first time I can remember seeing a draw in, must have been at least 8 or 9 months. And I think that added a little bit of fuel to the oil rally yesterday. We did back off quite hard there at the end of the state session, and I did see some comments. A lot of traders, and oil traders in particular, talking about the fact that that's going to be the end of the short squeeze because they've had a massive short squeeze in the oil price. Guys have been waiting for this kind of turn in terms of supply-demand, because the second that you start to get to these sort of draws and the price gets back above 60, guys are going to start to bring rigs back online. And so a lot of guys saying that that's going to turn things back to a bearish direction in the oil price. So we'll have to see if that plays out. But Herbalife, big move yesterday. Salesforce, big move on a couple of rumors of bids potentially coming in for those stocks. All right, Asia overnight, you can see there was a bit messy. It's the first time we've really seen, I think, a uniform move in direction for a while. It's just been incredible. China always kind of does the opposite of what the market's doing. We finally lined everything up in last night's session. You can see that the Nikkei, obviously the worst affected, down 1.2%. Nothing really ugly here. Everything down about 0.75%. Continue to see pressure on banks in Australia. Continue to see, it's funny because the miners here have actually been trading a hell of a lot better than they have in Australia of late. But other than that, no real leadership that I think we can look at to the Asian markets for. All right, so looking at corporate action this morning, we've got Gold Fields out with first quarter numbers, and I don't, unless there's some one-offs in there that I don't know about, these numbers actually look quite shocking. The all-in sustaining costs, I think, are down around $40 lower than where the gold price is currently trading, but they're, as far as I can see, that they put in a loss here, obviously, when the market was expecting a profit. I know that some of the earnings revisions for this stock had been very, very good. They're expecting growth going into the year, and then all of a sudden you're making a loss for a second quarter in a row. It's not pretty. But like I said, there's no, just looking at the very, very first glance at the numbers, there could be some one-offs in there that I don't know about. We also had Sasol, which came out with some production and sales numbers for 9 months ended the 31st of March. And so as it sits right now, sales numbers and production numbers are looking better than previous. So I think the market hasn't been bullish necessarily on the stock in general. I do think there's probably still a significant amount of shorts out there, so the stock maybe could see a boost on it. Same thing here. I'm looking just at just the surface here. I don't know anything in detail, so just watch it on the day. Those two stocks could really have some significant movement in them based on releasing those numbers. All right, key factors out today. We had Japanese monetary base, which is dead in line with prior numbers year on year. We also have unemployment rate out of Australia, which came in dead in line with the survey. We have services PMI out of Japan, which was actually much better than expected. We have factory orders month on month out of Germany, which were a little bit softer than expected, and initial jobless claims later in the States at 2:30. All right, let's get into the maps. The first thing that I want to look at this morning, same thing. We're going to go right back to the same chart. I've been harping on this, talking about how important it is. You can see here, for me, this is actually quite a big level because it's the exact peak that we got up to in March, the very beginning of March, and we had quite an aggressive sell-off in Treasury yields from that point. We're looking at, call it 225 on the nose, that we need to close above. You can see there, that's where we got to. Right now we're trading around 224. If we get above 225, this is my personal opinion, but to me, it's a game changer in financial markets. I think it'll put enormous pressure on global equity markets, and I think you're already seeing it over the last couple days. Action's been really shaky. You can see volatility levels spiking. You can see we've had a massive sell-off in some of the indexes like the DAX and that. We've also had a big pullback here, so just keep an eye on this. I still think that this is the number one leading indicator. All right, next one we're going to look at is the S&P. I'm going to draw it from here because that's really where we line up best. You can see we've definitely, however you want to draw this, we've been making a rising wedge. We've had 2 days here where we tried to get above the 2120 level in the S&P and couldn't do it. And if you just look here, it's ridiculous how much we played ping pong between the support and resistance levels. I think we dropped support last night on this pattern. Where I'd really like to see us get below would be the 2040 level to give us more confirmation. And obviously the 200-day moving average is down at 2031. So I think if you could take those levels out, I think things can get messy in the near term on the S&P. It would really line up perfectly for a sell in May and go the way situation as well. But either way you look at it, I think we've dropped support. I think we've got to come down and test support at 2040 in the near term and see if we can hold. If we don't, obviously, I think there could be a bit of a washout. All right, let's look at Goldfields. We talked about the numbers this morning. So Goldfields gave us a bit of a fake breakout the other day. We were trading well above this 55 resistance level intraday. Failed it horribly at the close, and you can see yesterday they just absolutely hammered it. I don't know if they knew something on these numbers today, but it hasn't been pretty. You can see we're coming right into support and right into the 200-day moving average. The support's right at around $50 on this trend line. If we drop 50, the 200 days only a chip shot away at 49.70. I think that this thing could really get ugly and can break down. It could be following suit on the back of what Siboney's done. Just look at the three-day move, let's call it. In fact, let's don't draw it like that. Let's draw it more horizontally. The 3-day move we've seen out of Siboney has been messy. They also looked like it was breaking out here above 28. It looked like it's getting the juices going, about to get a little bit of the giddy up, and then it just failed miserably. So I think maybe we could be seeing the same thing coming for Goldfields. All right, next one to look at is Mediclinic, which also gave us a big fake breakout the other day. Starting to look a lot of fake breakouts around here. So we got above 30. We traded a 34.70 or something like that intraday. Pulled back hard into that level and then gave it up the next day. Right now we're trading right at support. Yesterday we actually traded the end of the day below the support level. The support level's at 119. We managed to close above it yesterday, but I think if we drop 119 on a closing basis, this thing, we can probably move down 10 or 11 bucks to the downside. So just be careful about this one as well. The entire sector is getting hit hard in this correction, so just be careful with all those. All right, next one to look at is Naspers. Naspers definitely dropped some sort of support. We were showing this yesterday. I call it 1810, 1820, somewhere in that neighborhood. There was support. Now support now becomes resistance. We dropped out of that level. I think there's definitely at least a correction. I got to think coming here to about 1720, which was the level where we really popped out the top from here. And we get above 17, or if we can hold 1720, maybe it's a reason to start looking at it. But right now, all of a sudden, the chart not looking quite as bullish as it was. Bidvest. Okay, so we look at Bidvest. It's a little bit messy, but there's definitely some sort of a head and shoulder pattern setting up here in Bidvest. You can see here what I'm going to show you. So there's the left shoulder. There's the head. There's the right shoulder. I mean, it's not beautiful. It's not classic, but I think the formation's there. The bottom line is this level, somewhere between 1315 and 1316 is our neckline. I would say 1315 just in case. When we drop that level, I think we're going to see lower levels in Bidvest as well. All right, and the last one we're going to look at this morning is Woolworths. We're going to go out all the way to 2-year here just to have a look at what is quite a nice trend line that we've been in a really strong uptrend since October of last year. We've had a really big move up. There was actually a bearish report I read yesterday on David Jones and how that's going to affect them going forward, and that it's actually going to be a drag on them for the next couple of years. I think we've got to come down here and at least test support. I think that support, if I'm not mistaken, is about 86.40, 86.50 if we were to really zoom in. I looked at it yesterday, so just take my word for it. That's where the level is. It also matches up a little bit horizontally here. So, I think that if we drop that level, that'll be a big issue for Woolworths. The entire sector's been under pressure. I think this one's held up better than the rest. So watch it. I don't see any reason why we can't get down there and test it today. If we come down and test that sort of level and fail, then I think we could accelerate, maybe come down and test the 200-day moving average. That's it for today, guys. Good luck out there.